Good morning, traders, and welcome to the live stream. My name is Charles. I come from a community called Piratetraders where we are focused on the ES, the NQ, and how they move through the two-way auction process. If you are joining for the first time, please smash the like button and the subscribe. Bookmap puts a lot of effort into creating great content that can help educate traders like this live stream you're watching now. So if you hit that like button, you promote the channel, sending more people here. And if you hit the subscribe, you'll find out about future live streams like this one. So it is a great way to increase your knowledge base and support the community. All right. Well, I am looking at the ES right now. That is what you are seeing on the chart. That is the futures for the S&P 500. The way that I look at it is I have basically three different data sets that I look at. The one over here on the left, that is a market profile chart that shows me the auction process in 3 dimensions. So I can see where the market has gone, how much time it spent there, and how much volume it brought in there. That's the first sort of step in my analysis and my understanding of what to expect from the market. The next is the Bookmap. That is the screen that you see over here on the right. This is showing me the order flow of the market. So this is showing me how orders are entering and exiting the order book and how that affects what might happen in the future. I'm not the only one that watches the way that contracts enter and exit the order book. So are all the bots, all the computers that day trade the market. They make up more than 90% of the liquidity each day on the futures contract is, automated computer operated trading. And so most of the trading you see is computers. Those computers are watching liquidity. It is part of how they are programmed to make decisions. So changes that happen with the liquidity give us insights about changes that might happen with the market. So when I'm looking at Bookmap, there are several things that I'm paying attention to. If I'm looking at this chart right here, this is just the plain regular ES chart. I'm focusing on the stops and icebergs, which is an add-on that you can get. The icebergs look like this right here. There's 2 little triangles and then 2 sets of numbers next to it. If you see the 2 little triangles, that is a sign that somebody is putting in orders at that level, but they're trying to hide how many contracts they're going to enter there. So far, one person, one account has put in 35 contracts, have filled so far here. But because that iceberg is still there, because that green line is still there, it means they've still got 1 contract in the order book, which means the market is likely to come back to 54.45 to fill those contracts where that iceberg is. Now, that doesn't guarantee that the market's going to come back. This iceberg could disappear at any moment, and it could run away without coming back for the iceberg, even if it doesn't. But it is a really good insight to recognize where those icebergs are in the chart. Okay. The other thing I'm looking down here is the stops. So that's when you see the little green circles or red circles. That is somebody getting stopped out. Okay. So why does that matter? Well, because if we start to see a lot of people getting stopped out, a lot of shorts getting stopped out on the way up, when you get that last big set of stops, that's probably when the move is going to run out and turn around and come back down. Okay. So we like to keep track of both icebergs, which could act as magnets to pull price to them, and stops, which could act as an area for the market to reverse. Once we've taken out whatever stops we want to take out, that often exhausts a move in one direction, then the market turns and heads the other way. Okay. And then lastly, you may see me switch over and take a look at the market internals. This is this set of screens that I have back here. This sort of gives me an under the hood look at the market. So when I'm looking at Bookmap and market profile, I'm looking at the futures contracts and seeing what's happening there. The market internals give me an under the hood look of what's happening with the actual stocks in the indexes. Okay. So I combined all 3 of these, all day, every day, to give me understandings of what might happen to the market over the next few minutes, over the next few hours. Okay. Now, when I'm trying to think about what's going to happen to the market over the next few days, over the next few weeks, I like to look at the candlestick charts. I find that they are most helpful on longer time frames. And this morning, we're in a great spot to take a look at the daily chart. So as you can see, since February, we've got this trend line that has been acting as resistance time and time again when the market came to this trend line. In every attempt so far, the market has not been able to break through the trend line. And what has happened as a result? Big sell-offs. Not able to break through, big sell-off, not able to break through, big sell-off. Well, right now this morning, we are set up to finally break through that resistance level. That in and of itself, the opportunity for the market is bullish. I'm not the only one who draws trend lines on charts. Okay, all over the world, people are watching this trend line and they are going to decide today and tomorrow whether they want to go long or short, whether they want to take profits or stay in based on what happens with this trend line. Okay, so is this going to be super helpful intraday today? No, not at all. This trend line doesn't mean anything intraday today. We will zoom in a second and look at specific levels in the market profile chart for today, but bigger picture, this trend line will give us a good idea of what the market is going to do next. So if today the market opens and we immediately start to sell off, we should assume it's going to be exactly the same as the last few times when we couldn't break through it, and it's going to lead to a big sell-off. Okay, so if we cannot get continuation higher today, if we cannot close somewhere above yesterday's high, there's a good chance in the days ahead, the market's going to sell off. If we are able to close, above this trend line, we'll just say for safety to close above yesterday's high by the end of the day today, that will be bullish. It will increase the odds that this downward momentum is coming to an end. So likely what you will get is you'll get a little pop of short covering. Then the market will come back down and test this trend line for support. If it holds on that support, then straight to the moon. Okay, then we get really, really bullish. I think it will be relatively easy. I think it will be relatively easy because of this balance that we had over here. I think it'd be relatively easy for the market to work its way up towards the high 5700s. If we can get continuation. Again, this is not something for today. This is for tomorrow and the next day and the next day. If we get above this trend line and we get new buying and we close above this trend line today, there is a very good chance that this week we can make a move up towards the upper ends of the 5700s. Okay? Because it shouldn't take too much work to get through. As we already spent the time fighting the good fight, we decided to come back in. That becomes a look below and fail, which should kind of trigger a move right to the opposite end. Okay, so I would describe myself as bullish this morning, both as a day trader and as a swing trader. The potential for a move higher this week is there. They've still got a little bit of proving to do. They got to hold the lows today and they got to close a little higher. And then they got to keep that momentum going, in the open tomorrow. But if they do, this market is a chance to move higher because we are breaking through major, major resistance. Okay. So now let's zoom in a little bit. And we will take a look at the market profile chart from last week and try to get an idea of what levels to watch this week. Okay. So first things first, I don't love the way the market has moved higher here. The fact that we created this gap and then we just basically had 3 days that were pure artificial type of trading. It was just bots. It was just computers kind of slowly forcing the market higher each day for the last couple of days of last week. That's not great buying. That's not, you don't want to necessarily trust that buying has created the momentum to make a huge move to the upside. It's been artificial. Most of the longs in here have probably already taken profits. They were very short-term day operating bots that were doing a lot of this buying, but it is still momentum. So today, as long as we stay above yesterday's low, I'm pretty much a bull. Now, that doesn't mean we can't come all the way down to yesterday's low. We absolutely can. But I'm saying if we find support in the lower end of Friday's range, we should expect this market to go higher. If we get below Friday's low and we get new selling, then we start to get very bearish. Then the conversation comes to mind that would be a smackdown of the trend line on the daily. That would mean we couldn't break through the trend line on the daily. And it would mean we need to start repairing some of this weakness that we left behind last week. Okay, so that would increase the odds of a pullback. So we can keep it pretty simple this morning. We can say as long as the market stays above 54.80, it's bullish in the days ahead and it is likely to continue higher. Okay, if it gets below there, there'll be a little bit of indecision time where we'll be trying to figure out, is it a look below that fails and comes back up, or do we get new selling? But the moment we confirm new selling below Friday's low, we should be bearish for a pullback. Okay. Inside Friday's range, we should be neutral to bullish because we have momentum. We have those higher highs every day. Even if it is a slow melt, even if it is artificial, it is still momentum. And we don't fight momentum. We don't try to predict when the momentum is going to run out. We assume the momentum is just going to keep going and going and going until the market proves otherwise, until we make that lower low on the daily time frame. Okay. So as far as levels to watch for this morning, we still got a little while before the market opens, so we'll wait and see if we open with a gap or not. If we open with a gap, obviously the gap fill, the move to Friday's high will be the first, sort of level to watch. If we open inside Friday's range, I'd be watching this node right here around the halfback of the overnight range, 55.36. We call it anywhere between 55.30 and 55.36. This area could be support today for the market to continue higher. If it isn't, then we'd be looking to test the overnight low around 55.15 to see what happens there. Okay. If we find support above it or look below and fail, bullish, bullish, bullish. Okay. If we get new selling below the overnight low, we start looking for support levels around 5,500. Okay. This area should hold today. This area around Friday's lows. If the bulls are going to remain in control, if this market is going to continue higher, if we really are correct in being bullish, then it should hold yesterday's lows. We should not get below Friday's lows. If we do, that's the market giving us information. That's the market telling us we don't have buyers. This was artificial and we need a pullback to find them. Any questions on any of that from the chat? If you have not hit that like button yet, please do. Give me that thumbs up. You know I loves it. And if you have any questions for me, please let me know in the comment section. If you are watching today from the Bookmap Discord, then you're going to need to go to the Futures-Charles tab and leave your comments and questions there. I can see we already got people hanging out. We got Dan, we got Trader, we got Duzman and Steven. So good morning to all of you and welcome. Also, if you are using Bookmap's Discord, you have to verify once again. So essentially, you can just really quickly now pull out your phone and use this QR, or you could just go to the Discord, and inside the Discord, you will see a little button that says verified. And you can just click on that and you can go through and verify. It's a very quick process. You just click a couple links, you go to your email, you input the code, you get emailed, and then you're in. You're in like Flynn. So if you have not yet signed up for the Bookmap Discord, you absolutely should do it. There's tons of great traders in there, giving lots of great advice. And you just got to verify. They just want to make sure you're a real human being who isn't a robot. Because the robots, they just ruin everything. They're just no fun. All right. So we got Rich in the house. Good morning to you. Billy K is here. Arjit, welcome, welcome. Sheena is here. Grizzly Bull. He says, good morning. Let's get 100 likes for Charles. Grizzly Bull, I just think it's a brilliant idea. Let's see if we can get to 100 likes. We did it last week. We pulled it off. So far, we're only at 15, though, so we got a long way to go. Justin is here. Good morning to you. Sheena says, question, how does somebody hide orders, and how does an iceberg disappear if price doesn't touch it? Okay, so what is an iceberg? Like, what, in a literal way, what is happening? Well, think about an iceberg on the water. So this is your water line. That's the ocean. You got this little bit of the iceberg that's sticking out, and below the surface, the iceberg is much bigger, right? That's what an iceberg order is. So what they do is they put one contract in the order book, just one, and it just sits there, okay? But when the market comes down to it, the second and when I say second, I mean fraction of a second. I mean in a millisecond. I mean faster than you can even blink. The computer will automatically, as soon as that first contract fills, it'll automatically put another and another and another and another. So it basically halts price. Price is coming down, and then it's like, and it just can't go any lower because they just keep adding another contract and another contract and another contract and another contract, just like that, in a fraction of a second, one at a time. Another contract, another. Okay? When it's doing that, you will see the numbers going up. So it'll come down here and it'll go 35 will become 50 and then 70 and then 90. You see what I'm saying? And so as long as it's still there, as long as you still see it there, it means they still have one order in the order book, which means they're likely to add more when it comes back down again, right? They're going to keep playing that game until they have filled however many orders they want to fill. And you and I don't know how big that iceberg is. We don't know how many orders they want to fill, but they will just keep filling them at that exact level in a fraction of a second over and over and over again until they get that fill. Okay. So that is one way that an iceberg will disappear. They will just, get all the contracts they want to get and then it disappears. The other way is they can cancel it. So they can take that one order. So maybe let's say this guy right here, he got 35 of his contracts filled. The market starts to move higher and then he thinks, you know what, we're not going to come back down, but I still want to get more contracts. He'll pull the one that's there. And so that'll disappear and then he'll put it somewhere else in the order books. Okay. And they do that to hide the size. So nobody knows how much liquidity they are going to fill at that particular level. And even retail traders can do this. If you have, what are the different brokers that allow you to do this? I can't even remember now off the top of my head. There's a couple of different brokers. Interactive Brokers is one. There's a few different brokers that will allow you as a retail trader to do this. So even if you only want to fill, 8 contracts or whatever, you can do it as an iceberg. So they've become really common. Almost any time a computer is entering trades, this is how they do it. So if you see tons of icebergs all over the place, that just tells you most of the trading that's happening that day or at that particular level is a computer, right? It's artificial. The other thing that you want to keep an eye on is when you look at the iceberg setting, first you see a number that shows the number of contracts. Then you see this little number here that's next to it in the parentheses. That's the number of icebergs at that level. Okay. So down here, there's only one iceberg. There's only one account that is buying at this level. But up here, there's 2 accounts that are doing it at this level. And sometimes you might see that number get as high as like 20. Like you might see 20 different accounts that are buying it at an exact level. The more accounts that are there, the more likely it is to be retested. So, one account here at 55.45 is less likely to get tested than the 2 at 55.55. Man, that is so exact. 45 and 55 to a tick. So yeah, that's what the icebergs are. And it's important to keep in mind. I would never in a million years take a trade purely because I saw an iceberg. So for example, we have 2 icebergs below us right now. One might think, well, that increases the odds of markets going lower. Let me just go short right now to get to those icebergs. No. Yes, it does increase the odds the market is going to go lower, but not enough to convince me to short. I would need to see other pieces of data that are confirming I want to go short before I would enter the short. However, if I was thinking, man, I want to get short, and then all of a sudden I saw these icebergs disappear, what am I going to do? Change my mind. Whoa, wait a second. I don't actually want to be short here. Okay. So if I'm in a short, maybe I'm moving my stop below my entry. Or if I'm waiting to get in a short, maybe I'm deciding just to let this one pass by or waiting for more data points to confirm that I should get in. That's what makes Bookmap so magical, is that as it changes in real time, second by second, as the signals that you're watching change, the value of that information, is important in that second. So if you can change with the information, if you can choose to not get stuck on, I'm a bull and I think the market's going higher and blah, blah, blah. If you can suddenly change your perspective because the order flow is suddenly changing, you will stop yourself from being in losing trades a lot of the time. You can protect yourself from a lot of losing trades. And also, if you use those data points to, get you into trades that you may be less confident about. So let me just name one as an example. So let's say over the next few minutes, we move a couple points higher. Okay. And the market comes down and it tests Friday's high. It fills the gap and it tests Friday's high. And we're bouncing around Friday's high and we're grinding, and I'm trying to decide, should I go long or should I go short? Even if the signals are telling me to go long with these icebergs here, I would choose not to enter that long. Now, let's say all of a sudden they disappeared. Boom, I'm in that market because I already wanted to go long. I was already feeling support. I was feeling that the higher probability was that the market was going to go up. And the only thing that was stopping me from entering the trade was those icebergs. So the moment they disappear, I'm in the trade, right? Or vice versa, right? Maybe I've got these icebergs here. I'm watching the market grind around the overnight high, or grind around Friday's high. And then all of a sudden I start to get signals that are bearish. I start to see that we're not finding support. The tempo slows down. The ticks are starting to push below the zero line. I'm starting to think this thing is going to pull back into Friday's range. Well, now these icebergs are the thing that give me the confidence to enter the short, to then say, okay, everything is telling me to short and we have icebergs below. So they always just have to be one additional data point to whatever the other thing is that you're looking at. In this case, the gap fill. And just like they use icebergs to push the market around, they use liquidity to do it as well. So they will put in orders in the order books that aren't real, that aren't going to actually fill, and then they disappear them when the market gets there. This is something called spoofing. Yes, it is illegal. We don't need to go into that conversation. Regardless of the fact that it's illegal, they do it all day, every day. Okay. It is just part of markets and it's how it works. So for example, right here, the market starts adding more and more contracts. You see this, how it goes from a smaller, thinner level to like thicker and darker and more orange. So they're adding more and more and more and more liquidity. What are they trying to do? They're trying to get price to come up to this level. Okay. But then if we zoom way in, we can see that right as the bid got to that level and tried to fill, they disappeared it. And then it started to go down and they added it once again, right? And then right as the bid got there to fill, they disappeared it again. Poof, it was gone. And none of those contracts actually changed hands. Okay? This is another great way that Bookmap can give us insights about the market. Now, we can't always predict what is the game that they are playing. We don't always know, are they trying to push the market up or are they trying to push the market down? But we do know when the game changes, because then suddenly there will be a change in liquidity. You will start to visually see things change on this chart. So for example, right now, they're just adding more and more liquidity above price, and it is continuing to pull price to it. So as long as you keep seeing them add more liquidity above price, assume price is going to keep moving to it. But if all of a sudden the liquidity above disappears, I do mean in an exact way like this, the way it suddenly appeared, poof, dark, orange. If it suddenly disappears up here and you suddenly dark orange appears down here, guess what the market's going to do? Turn around and start coming back down. So if you're in a long and you're watching the market pump higher and you don't know where to take profits, and all of a sudden you see the order book flip, well, then you know, okay, the market's probably running out of steam here and it's going to turn around and come back down. So the thing about order flow is this is where the big players are fucking with each other all day, every day. Okay. Because all the bots look at the order flow. There are other bots designed to try to confuse the other bots. Okay. It's just like, it's warfare out there. Computer versus computer every day, trying to just grab a few points at a time. So there's a lot of misinformation in here. You want to filter it properly. That's your edge. Being able to know what the information is, but to know when to pay attention and when to ignore it, when to take trades and when not to, that's your edge. That's the advantage. And you don't really need to know what the bigger players are doing or why. You just need to know when it's giving you what information. I talk about all of this and more in my Mastery of Markets and Minds workshop. If you're interested in taking that workshop, you just head to marketsandmind.com. So that's plural markets andmind.com. It'll pop up with a screen like this. You scroll on down, you just click on my ugly face, and then you'll be able to sign up. If you sign up in the next 3 days, you get $75 off for the early bird special. The workshop starts in just a couple of weeks. We are a whopping 14 days away, literally 2 weeks. Okay. So this is your last chance to get the early bird special over the next couple of days. Buy it now. You can also use the promo code Bookmap as you check out, and you save an extra 10%. So if you want to learn about how I trade markets, how to read the auction process, how to do what I do, this is the workshop you want to take. And it doesn't happen often, only a couple times a year, and it happens to be going in 2 weeks. So you might consider signing up now. Good morning to Homet, DNK, Pippin, Justin. Justin says, can you please go over how the order flow color changes as orders push price up or down? So the colors that you're seeing are the number of orders currently sitting in the order book. So if you're seeing it above price, that is shorts that are sitting there waiting to get filled. If you see it below price, that is longs waiting to get filled. You do not see shorts below price or longs above price. The only way to get those in the order book is to get into them at the moment you get there. So those are stops. Stops are not visible in the order book. So these are orders to go long or go short. Now, you don't know if they're entering a new trade or they're taking profits on an old trade, but that's what you're looking at. As a general concept, it's important to recognize the market always moves to liquidity. The market does not care whether you go long or short. The market doesn't care where you go long or short. It doesn't care if you go long or short and get in fast or get out fast or get in and stay in for a week. It does not care. It just wants as many contracts to exchange hands as possible. So it will move to whatever level will make the most contracts change hands over and over again. If there is significantly more liquidity above, then that's where the market's got to go to get those contracts to change hands. But what you don't see that the market does, and I'm referring to the market as like an animal in this case, like everyone, all the participants in combination, what the market knows is that there are hidden orders, there are stops. So it doesn't always move straight to the highest liquidity. Sometimes it goes and stops everyone out first, but that is always a great indicator to be aware of. Where is the liquidity at this moment? How is it changing? Okay, so we are opening, technically this is a gap. So let's see if we can turn it into support. I wouldn't use yesterday's high. I would say yesterday's closing price. So Friday's closing price was 55.48. I would say I'm bullish for a move higher if we can stay above there right now as a gap and go. Okay. So this is what I was talking about. Remember I said the market will go up until it takes out whatever stops it needs to? We may have just done that. You see how there's a single person, a single account that just got taken out for 300 stops? For this market to keep going higher, it would have to mean there's more people to get stopped out and more people to get stopped out and more people to get stopped out. So if the market reverses right now, we're likely to get a bit of a dip and come back for this iceberg at 55. But if it keeps going, they're going to have to keep taking out stops and stops and stops. You have to keep seeing these green dots pop up because that's shorts covering. And to keep this momentum going, they got to keep those shorts covering again and again and again. So let's see what happens. Did we just make the high of the day, or are they going to keep it going? Or the high, I shouldn't say the high for the day, just the high for the moment. Took out some FOMO longs. So do you guys see how that happened? I just described it and it just happened. We moved higher taking out stops, moved higher again, but didn't take out any stops on that next poke up. So what happened? We reversed back down. So now we're coming back to test support around 55. Okay. So this is how this helps you. When you see a big, huge stop like that, there's no guarantee that that's the high, but you may have just made the high. And that one final little poke, not taking out more stops, is telling you, okay, we're not getting buyers by forcing shorts to cover up here. Let's dip and let's get some discount shoppers to buy. And that's the auction process. That's what it's doing all day. What else changed in that moment where the market just reversed? They started to pull this liquidity up here. And where did they start to put it? Down here. See that transition? You can see these things happen in the order books. Live and in real time, right in front of your eyes. With the bookmap. Percy is here. Good morning to you. Dante says, what is the software on the left? It's called Window Trader. Any market profile software will do. One Wall Free. One Wall Free says, hello. I think that's an interesting concept. Should it then always look for a balance? So where many sellers and buyers want to exchange? An imbalance would create much volume as it needs two sides. Yes. So the way I think about balance is that it's where the auction kind of comes to an end, right? So it's like you have momentum. A market is moving a certain direction. Say it's moving higher. That's momentum, right? What is that? What is that momentum? It's more people buying every dip, right? They want it. They want it. More shorts covering on every rip. They want to get out of their shorts, and then more buyers, and then more shorts cover, and then more buyers. So you get basically shorts covering and new buying. That's momentum, right? At some point, there are no more buyers. The market has gone as high as it's going to go, and the buyers just don't want to buy it anymore. So the market will come down, and some buyers will step in there. And so you get a little bounce, but not enough to make a new high. And so now the sellers start to step in. And then the buyers are defending and the sellers. So yeah, you get two-sided trade. That's balance. And then from there, the market can either keep going higher or it can turn around and go much lower. And that's based on what happens in there. If the buyers keep buying the dips over and over and over again, eventually they will break through the resistance from the sellers, and then they'll get their continuation to the upside. But if they can't, they'll have to pull back with price in order to find new discount shoppers that are willing to buy. So when you get to that two-sided trade, that's where there's indecision. That's where the auction starts once again, trying to convince people to go long or short. And of course, we can see that in our market profile chart based on the areas where the market spends the most time and brings in the most volume. So the range from Friday and the overnight are kind of, too tight to really see this clearly. But, if we were to look at, for example, Thursday's range, we can see that happening. So the market had a lot of momentum right from the open. Straight up, straight up, straight up, straight up. Then it had some two-sided trade where it went sideways right here. Okay. But it broke higher. The buyers were able to hold the support and break higher. So you made that next momentum up, and then you had two-sided trade once again at the high. Okay. So then when the market comes back down the next time, guess where it finds support? Boom. Right where that trade was before. Because we already fought that fight. We already debated it, and the buyers won. So they were there waiting the next time when the market came back. Okay, so somebody asked about, oh no, that iceberg filled. Never mind. So do we now see the large number of contracts taken out at the low? So they took out 300 contracts at the high. That caused the market to run out of steam and start coming down. Then they took out 200 contracts at the low. That caused the market to start building up momentum and heading up. So this is what I talk about. When you see a large order, 100 plus contracts get taken out at once, that can be, not a guarantee it is, but it can be a moment where the market reverses and starts heading the other way. I would describe this as chop around yesterday's high right now. I don't think the buyers have taken control yet. I don't think this is support. I think the market is just, like I said, it always wants to just get as many contracts to change hands as it can. Right now, it's doing that by stopping out the sellers, then coming down and stopping out the buyers. Now they're trying to head back up and stop out the sellers that just entered. So right now, they're just grinding sideways, taking out stops on both sides. They're not ready to break one way or another yet. Dusman says, do you trade the overnight? If so, what levels of significance do you use? So I don't trade the overnight. No, not at all. I very much like only working a few hours a day. So I would never want to trade the overnight because then I'm working 24/7. So yeah, I keep it pretty simple. I'm generally only trading the first, say, 4 hours of the trading day, and that's about it. Yeah, definitely not into the overnight. When the regular trading hours opens, I can tell you how I use the levels from the overnight. So obviously the overnight high or the overnight low. So whatever was as far as the market could go up or down, those levels are very, very important. Those are where changes in the market happen. Speaking of which, we're at the overnight high right now. So, that is certainly a very important level to watch. As well as levels where the overnight market spent a lot of time and brought in a lot of volume. So for example, we've got this node of volume right here. Okay. And we've got the area where we spent the most time right here. So if I'm watching the market come down today and I'm looking for a place for there to be support, this is an excellent place to look right here in between 34 and 40 for that reversal back up. So time and volume, that is important, and whatever was the high and the low. And the last thing I look at in terms of the overnight is what is it in relation to yesterday's range? So is the overnight net long, net short, or generally more neutral? Okay, well, this is bullish 2C right now. It is day 4 of the fake artificial melt up This is a continuation of what we got yesterday. This low to me is very weak. Okay. Just of the exactness of how it came into yesterday's range. So this is a weak low, and the entire move up right now is just taking out stops. It's not bringing in new buyers. So this is a continuation of what we've had the last few days. This slow melt, artificial bot driven move to the upside, but I am now bullish as long as we stay above the opening price. So if we cross through the opening price at 55.58, then we might be looking for a bigger pullback, and I would not want to be long this market. But if we can hold support here and turn that opening price into support, we can continue higher. If you don't feel comfortable longing yet, one great thing to wait for would be this iceberg disappearing. Whenever this disappears, you can trust the momentum up. But because we know this is artificial, as long as it's still here, there is a chance they're coming back for that iceberg. So I am bullish. I would be willing to buy support close to that opening price, but I would not want to be long if we cross back through it. All right, well, now that we have momentum up, it's time to start talking about resistance. And quite frankly, there is not that much above price right now. Next major resistance to me is 5,600. So we got a little bit here around 89. But yeah, not a ton of resistance above right now. DNK says, can we take a look at the NQ? Let's take a look. I have a feeling it's doing the same thing as the ES. When we have these robotic moments, the markets tend to move exactly in sync. Yes, sir. Same thing on the, same exact thing. Bullish above the opening price. You got some resistance you're poking into right now around 19,640. So look for some resistance and a pullback there. Support on a pullback is the overnight high at 19,573. Can they hold it? If not, 19,573, around 19,555. Just above that opening price. You don't want to be long if they cross back through that opening price today. But for now, it's bullish. Let me just take a quick look at the daily on the NQ as well. Yeah, same thing. Broke through a trend line on Friday. Looks like. Oh, yeah. Broke through it last week on Thursday. So, yeah, Q's looking bullish. Dante says, how does Window Trader differ from Bookmap? What's the advantages? Well, they're different. They're totally different pieces of software. So Bookmap is order flow software. So it's focused on showing you the order flow. That's what the heat map is all about, the colored part back here. That's really where the power is, in my opinion, of Bookmap, is that heat map. That ability to see, not just in real time, where are they adding an order and pulling orders, which anyone with level 2 data can see, but being able to map it out and see what price does in reaction. How adding liquidity below might scare price back up, how pulling liquidity above might cause the market to spike quickly, so on and so forth. It's the order flow aspect of it. Those orders entering and exiting the market, how they affect the market, right? That's what Bookmap is looking at. What Market Profile is doing is it's just showing you price action, okay? It's just showing you the same thing as a candlestick chart does. But it's showing it to you in a way that is easier for the human mind to comprehend. Boing. All right, so what just changed in the order book? I'll switch to the other screen so you guys can see. Boom! Instantly just went dark. So some piece of news just came out. Some shocking piece of information was just set into a microphone. And suddenly all the bots, like we said, 90% of the liquidity during the day is bots. Well, that's them. You just watched all this that just poof disappeared. That's bots. That's those day trading bots. Okay. So you get a little piece of bad news. Everything disappears. Poof. Order book gets dark. Market makes a big move in 2 seconds. Do you panic? Are you like, oh my God, the world's coming to an end? No, because you saw it happen in the order flow. You saw those orders disappear. You can see them start to come back again. So you can now know when to trust support or resistance, because it's when those orders start to come back, when that color starts to re-enter, which was almost immediately here today. All right, so this is the last chance for the bulls. They have the momentum so far. If they want to keep the momentum going, they've got to hold this opening price. So what we're looking for right now is a big wave of buyers to come in and poke the market back up if they want to keep this momentum going to the upside today. That's weird. All right, well, it appears we do not have the buyers, which is less bullish to see. They still have a few ticks left to defend here. Like I said, I would remain bullish as long as we're above that opening price. But if we cross back through, the target becomes a move to 55.45, where that iceberg is waiting. Can the buyers hold it? No diggity. The buyers can't hold it. Hold it. All right, guys. So that's not bullish, right? They got above the overnight high. They got support, but they could not stay above the overnight high. I'm not sure what this was, what caused this little break, but that break has switched the momentum, and now the sellers are taking the market lower. So I'm looking for support, a potential bounce at 55.50, and then down around 55.33. But it may just be this iceberg right here. As soon as that disappears, the market might turn around and head back up. So let's see what happens. But I am no longer bullish. Intraday. I'm still bullish on a daily time frame, but intraday we need a pullback. Ignore these little yellow lines. I'm just resetting my software to a smaller tick increment. It messes those up. So ignore those. Okay, so some potential support here around 45. The question is, does that iceberg disappear? Do we fill all the orders they wanted to fill there? That iceberg's been there since the market opened. $200 contracts. That's what they wanted, and they got it. Boop, boop. So is this enough to reverse the market up out of here? No, sir. All right, so the next support is around 55.34. Looking for a bounce there. So remember what I said about today. Right now, intraday, the momentum is down, okay? And we haven't found support yet. We haven't had good, strong support yet. So we will assume the market will continue lower, as long as it continues to go lower, all right? But a very important level to watch will be this overnight low right in here. And then the areas around Friday's low. I can't give you an exact level to a tick, but just anything above Friday's low in here between, 85 and 5,500. So 54.85 and 5,500. That area should act as very strong support today. If the market can find support, either down here near the overnight low with a look below and fail of the overnight low, or down here near yesterday's low. If any of these act as support and the market turns around and makes its way back up by the end of the day, that is as bullish as can be going into tomorrow. So even though it goes down today, it's still bullish as long as it stays above Friday's low into tomorrow. If it gets below Friday's low today, then it's getting very bearish. And if it closes inside Friday's range today, it is bullish, but less so. Okay. So I would say right now it feels like the momentum is to the downside, but I don't think it's going to last long. I think the market is looking for support here. So as I said, 34 is a great area to look for support. If not down here around the overnight lows, 55.20s for a bounce. Okay. With that, I must say goodbye and hand you all over to Bruce for his live stream. If you are a member of the Pirate Traders Brigade and you hang out with me every day, head on over to that private stream and I will see you there in about 2 minutes. If you are wanting to take your trading to the next level, at this point, you just got to take my word for it. My workshop will do that for you. A lot of people struggle in this business because they are on the wrong path. They're listening to the wrong people, telling them how to get rich quick, get rich easy. Just do my 5 trading setups and you'll make 10 grand a week. People fall for this idea of easy money. What I teach is real trading. It is hard, what I do. It is a challenge every day, but it works and it can lead to consistent results that will work in any market, any time of year. And so if you're interested in taking your trading to the next level, my Mastery of Markets and Minds workshop is all encompassing. I don't just teach my setups, which I teach. I don't just teach you how to read, Bookmap and market profile software and the market internals, which I do, but I also teach you how to think like a trader, how to learn to think in probabilities, how to differentiate, is your problem a market-based problem or a self-based problem, something with your psychology. I teach you how to manage risk and protect yourself from drawdowns. And most importantly of all, I teach you how to look at the market as an auction process, right? It's not about who's doing what or why or any of that. It is where does the price go? How much time does it spend there? And how much volume does it bring in? I won't be right 100% of the time, but I will be right enough to make right more than I'm wrong enough to make profits and to make a living from trading. Okay. So if you're interested in taking that course, there's only 3 more days, today and 2 more, to sign up with the early bird special. And of course, you can use promo code Bookmap in checkout to save an extra 10%. Thank you so much for watching. Members of the brigade, let's set sail. Goodbye, everyone.